It's now time for our second panel titled Empowering the Global South, Inclusive Climate Finance. The panel will explore solutions to fix financing so resources can be channeled to innovators and communities capable of driving impactful climate action. So I would like to welcome Rob Bradley to the stage, who will moderate this session. Rob, over to you.
To secure an inclusive, sustainable, and resilient future for all, we must channel climate funding directly to the most vulnerable communities, ensuring they have the resources and support needed to adapt and thrive in the face of growing environmental challenges.
Well, ladies and gentlemen, it's a great pleasure to see you all here today. Thank you so much for joining us for this important discussion. I feel like at the beginning of some sessions we need to say, well, why isn't there enough appreciation about how important this issue is? But I'm not going to bother with that for this session. No discussion around climate action is complete without a discussion about how we mobilize finance towards real solutions. We've heard from Dr. Keller this morning and from many others about the challenges of moving capital at the scale we need for the dramatic transformation that's necessary if we're going to successfully address climate change. So in order to discuss this incredibly important issue, we have a really fantastic panel with us today. In keeping with the spirit of New York Climate Week, one of them is stuck in traffic. And I feel like no event is really complete without that being true of somebody. Hopefully we will be joined by her shortly during the course of the conversation. But let me introduce you to the exciting panelists who have defeated the traffic and made it here so far today. Let me start with Angela Churie-Kallhauge from the Environmental Defense Fund, where she is the Vice President for Impact. Great to see you, Angela. Dr. Al-Hamndou Dorsouma. Dr. Dorsouma is the Division Manager for Climate Change and Green Growth at the African Development Bank. And Gisele Saralegui, who is the Global Climate Lead at the International Finance Corporation of the World Bank. That's it. Thanks so much for joining us today. This is an issue, as I say, which everybody starts by saying how important it is. You must be very used to being some of the most popular people at any given conference. One of the central challenges that we hear about again and again is that the scale of public finance being delivered is not going to be at the level needed to achieve the enormous transformation that we need. And so I wanted to kick off by raising one of the questions that comes up again and again, and perhaps, Gisele, I can turn to you first. How do we frame our action so as to attract private capital? Given that it's not just about driving it to particular technologies, low carbon solutions and so on, but it is about delivering it all around the world so that the transformation that we need can be made in every country.
Thank you. It's a tremendous challenge, and I want to come back to the scale because we've just heard out from the UN on the stock take, and it sends out alarm bells. On one sense and others, accelerated action in finance. And when we think that we need to reduce emissions by 43% by 2030, that's a blink of an eye away. So I can tell you from World Bank Group, from an IFC perspective, we are stepping up to the climate challenge, to ramp up our engagement, partner with other partners, and really look at an inclusive, resilient climate space where we are crowding in financing. I'll give you some numbers, and then I'd like to move into the space on what we call PPP, public-private partnerships, because I think that's going to be key to unlocking the acceleration of action. And again, just to scale, there's an estimated 2 to 3 trillion needed annually to meet these goals. So we are just one part of the bigger puzzle. Many of us here are working to deliver those solutions. But IFC last year financed 14.4 billion, both own account and mobilized money. The bank, 38 billion in its entirety as well. That is an important number, but it is part of that number getting us to the trillions. And when we look at that inclusive growth, I think we also look at some of the challenges that look at creating bankable projects. We know that money is out there. We hear that from our partners, both investors and financial institutions, but the issue becomes one of bankability. And so I'd like to think of us and think through, it's not just about money, but it's also about a broader context, really one that looks at creating that pipeline of projects that are climate smart, bankable, and viable. But those depend on a number of things. They depend on clear national policy and regulation that helps create an infrastructure and framework. They also depend on government capacity and priorities to really set the stage and engagement. And there's also an issue of knowledge as well, having clear data around climate risks at a local, at a national level. And so we are working across all of those spaces really to deliver and build that capacity, to deliver PPPs. And I wanted to, if I may, share with you some of examples of success that we've been in looking at. How do we build up and create those climate smart PPPs? How do we create replication and scale? So for example, in Brazil, we've been working with CaixaBank to do street lighting. So replacing toxic street lighting with energy efficiencies that helps reduce consumption by about 60% and also helps reduce greenhouse gases. And we started with a small scale, but now there's a pipeline of some 20 projects crowding in street lighting, and that's going to help Brazil actually build to achieve some of their energy efficiency. So that's just one example. I've got many more, so just bear with me. I want to share a few more. Dakar BRT. We transitioned to Africa. Clearly there, we've been working with the government of Senegal to bring in a bus rapid transit system that is 100% EV. So that's a first in Africa. These are the opportunities we can bring to scale and replicate. And moreover, it helps address the social congestion issues, connecting people and jobs. These are all critical aspects. The energy transition is another area that we've been focusing on. And again, maybe kicking off with Africa, we've been looking at scaling solar programmatic approaches. In Senegal and beyond, we've been looking and bringing in that scaling solar to help the energy transition with renewables and had an important footprint there. In India and other countries like Uzbekistan, we are delivering again with PPPs the energy transition, moving towards renewables, helping build replication and scale. And these are just a few of the examples because IFC has been delivering about 20 gigawatts across this energy transition. So I'll stop there. There's a lot more to share, but just wanted to share some of those highlights.
Thank you. I think there's a lot of these areas where we would want to dig deeper. Let me pause first of all, though, to welcome Racquel Moses, who's the CEO of the Caribbean Climate Smart Accelerator. Thank you so much for joining us today.
Thank you for having me.
As I say, it's always a badge of honor in any conference to have somebody who got lost in the traffic. So great to have you join us. So I wanted to think about a little bit more about this question of how climate finance helps leverage private capital. And Dr. Dorsouma, perhaps I can turn to you. This is something, I think I've been in this business 25 years, and we spend a lot of the time having the same conversation about climate finance. Is it sufficiently at scale? When is it going to be delivered? How is it going to be delivered credibly? And how does it leverage private capital? As you look at the landscape now, particularly within Africa, where you focus your work, how do you see climate finance working most effectively?
Thank you very much for inviting us to this very important discussion. For us at the African Development Bank, we have been supporting African countries to deliver climate finance for more than 15 years now. And we know that climate finance is still a challenge in Africa. As compared to the rest of the world, currently Africa has the least share of climate finance, around 3%. Last year, Africa received 29.5 billion as climate finance. And most of it came from private sector, public sector. But according to our analysis, we know that Africa needs around 250 billion annually by 2030 as climate finance. So there is a huge gap to be filled in Africa as far as climate finance is concerned. And we know the challenges. My colleague from IFC has already mentioned some of the challenges African countries and more globally developing countries are facing, including also the complexity of climate finance architecture. Many countries are facing difficulties to just meet basic requirements to access climate finance, meaning being accredited to those global climate funds, to be ready to access funds. Mm-hmm. And also the issue of bankability, of course, is there, but linked to that, there is an issue of capacity, expertise, lack of expertise to develop projects, bankable projects, ready for investment projects that are ready to tick the boxes. So these are basic issues, but we are still trying to help many countries to overcome those issues. But there are solutions, of course. We know that with little money, let me give you an example of Côte d'Ivoire, where we are based. We have given $500,000 US to the country, just a grant, to help their institutions become ready to access climate finance. And in 1 year, they were able to mobilize 6 million from one global fund. So it shows you that with public funds, if you use them smartly, we'll be able to leverage additional resources. And this is a small example, but if you can use smartly public funds to leverage, to create enabling environments for private sector to come in, that will be great, because according to our assessments, 75% of the resources needed for Africa to meet the NDC commitments under the Paris Agreement will have to come from private sector. And private sector is not ready yet. There are issues relating to the perceived risk of investment in Africa. Mm-hmm. Also, there is an issue around perceived, limited returns on investment from climate investment. So we know that there is a strong case for mitigation, for instance. It's easy to get to develop projects for renewable energy efficiency, sustainable transport. But when it comes to adaptation, which is Africa's issue, the business case is not yet there. So we need to create that business case. And recent studies from the Global Center on Adaptation have shown that, if you invest $1 in adaptation, you will be able to get a return on investment of about $2 to $10. So the case is there, but we need to make strong advocacy in order for private sector to invest on climate actions. And opportunities are many on transport, on energy. Transport, for instance, that 70% of Africa's future infrastructure is yet to be built. And this is a huge opportunity for private sector to invest in sustainable transport, climate resilient roads, green transportation systems, on agriculture, providing, crop resistant, drought resistant crops to farmers. This is also a business opportunity. So climate is no longer a challenge. We see it as a business. And this is what we want to tell the private sector. We used to tell that already, to say that to private sector for many years. It's important that we view that as an investment opportunity. There are resources there that we can use to create the enabling environment. But governments have also the role to play to develop policies, regulations that could help private sector to come and invest. So I think there are opportunities like that. The African Development Bank is already playing its part. We have last year, for instance, allocated 45% of our annual investments as climate finance against a target of 40%. We are currently championing several flagship initiatives. For instance, one of them being the Desert to Power initiative. This is a 20 billion investment to create the largest solar zone in the world in the Sahel. This is an area where the solar opportunity is there. And we view that as an investment opportunity, and we are already implementing that program. We have also launched a 25 billion program called Africa Adaptation Acceleration Program. As AFDB, we have put a down payment of about 12.5 billion, and we are now mobilizing the additional 12.5 billion from other partners. And this program is already showing results. As part of this program, for instance, we have been launching what we call the Youth Adapt Challenge for youth-led initiatives to come and show how they can contribute to adaptation action. And to date, we have been able to identify 35 youth-led enterprises on adaptation, and they are already showing results. They are already getting some benefits from their investments. They are creating jobs. So this is a best practice that we are trying to scale up. The issue is also about the scale. We need to start scaling up all of those initiatives that we are championing. Thank you.
Thank you so much. There's so many issues here, and I want to come back to questions of adaptation and capacity. But while we're still on this question of mobilizing private finance, perhaps, Angela, I can turn to you. One of the areas where there's a lot of hope, but perhaps a lot of frustration at the moment is around the use of carbon markets for driving that finance. We heard from Dr. Kande Jumkela this morning in our opening session, really a challenge around the kind of equity dimension of climate finance, and particularly carbon markets. He mentioned that prices within, say, the EU emissions trading system, are up as high as $100 per ton of carbon dioxide at certain points. Whereas, for instance, if carbon finance is driving forest protection in Africa, you're more typically seeing $5, $7 a ton. Could you just speak a little bit to, if carbon markets are going to be an important driver of finance, first of all, how do we speak to this equity issue? And secondly, what is needed for that really to be unlocked?
Thank you, Rob. And first, I think we need to be clear that we're talking about two different kinds of markets. Where we have these high prices, as in the EU, these are highly regulated compliance markets, where they are mandated buyers, there's certain certainty and expectations on the pricing. But we also know that many of the credits that we're talking about in the African context relate to the voluntary market. And this pricing, of course, varies based on the perception of risk, as you just mentioned, capacity, and generally a lot of the projects have been relatively small. So in a sense, I think that has disadvantaged, in the case of the African market, the kind of prices that are offered for some of the credits that are generated there. But I think much of this is bound to change and is changing. And for many of the people who attended the Africa Climate Summit a couple of weeks ago, it became very clear that first there is a strong political will and political momentum to support the use of markets. The African private sector, while, yes, small, is very vibrant. There's a lot happening there to kind of also mobilize the engagement of even private financiers to put up some of the capital that's required for those projects that will generate the credits. There are efforts, and I saw in the previous panel, a colleague from Rockefeller who was speaking, they have been involved in supporting the Africa Carbon Markets Initiative, which really is trying to target a number of these bottlenecks that will not only create the necessary capacities, the data sets to be able to inform the types of projects, because without good MRV, you have high risk, then there's the appetite to buy those credits aren't there. And then, of course, there is a strong move to build the credibility of the supply in making sure that they're much more inclusive processes with communities and really factoring in the value of the benefits. So in a sense, yes, it is true that prices have been low, but this is basically not just because of the carbon market, but because of the broader context. And the concerted efforts right now to not only build that capacity and to address some of these bottlenecks in Africa by Africans is actually going to, at least I'm very optimistic, going to give a better opportunity to generate high quality credits and therefore also stimulate a lot of demand and better pricing as well.
Thank you. And you touched again on this question of capacity, and I think this is a really fundamental one that perhaps doesn't always get the attention that it deserves. Successfully mobilizing finance, but also technology, the regulation around it, and so on, requires in many cases institutions and practices that in some countries have been built up over 150 years and more. Here, as we think about mobilizing climate action, including adaptation, but also the need to develop in a low carbon pathway. Building up that capacity in a hurry is a big challenge. And Racquel, turning to you, I mean, you work in a region dominated by smaller countries that in many cases are doing sort of world-leading activities around this, but where I think the capacity constraint is a real one. Could you reflect a little bit on how do you see success, and how can climate finance be structured in such a way as to help address those kinds of concerns and to unlock the finance that's needed in a region like the Caribbean?
Yeah, thank you so much. And I wanted to, it wasn't neglect or I got lost, and normally 100% that'd be my excuse. I was actually, true story, in a meeting with Michael Bloomberg, and you can't leave when you're in a meeting with Michael Bloomberg. So I just stayed and I was like, I'm coming, and then ran here. So, you know, the issue of capacity is real, and it was so refreshing to hear. It was almost as if you just exchanged Caribbean for Africa, and all of the challenges that you're facing are challenges that we're facing. Mitigation is where the finance is going. Adaptation is a struggle. It's public finance, but private finance is far too cautious about funding it. And there's so much. But when we talk about capacity, I want us to be super, super clear, because it's so important that we understand the nuance of capacity. It does not mean that we do not have the talent. And I want to make sure that that is incredibly clear. Many times we have even greater talent, but because we don't have the economies of scale, and that is a challenge that we face. And we also face disproportionate access to climate finance than the rest of the world. For example, between 2015 and 2021, there was about $7.3 billion worth of philanthropy coming to the region. 75% of that went to Puerto Rico and USVI. So the rest of the region, you know, just that aren't US territories got far, far less of the climate finance. We're about 1.2% of the globe, but we get 0.3% of climate finance. So there's an absolute depression in terms of our access to money. And when we talk about the issue of capacity, it is that all of the resources that we have are required to go very broad and cover many different jobs, despite having the training to go deep. We may not always have exactly the experience, but we've been well trained. Some of the head of UNFCCC from Grenada. So, you know, it isn't that we lack the talent. Mia Motley, we have talent. But even when, and what you're saying about the carbon credits, I agree and disagree a little bit. I appreciate that there are sometimes disparities in the quality of the projects, but I also think that we are not empowered to negotiate. We don't get access to the same kinds of finance. So whereas somebody would say, oh, I insist upon $100 a credit, but yeah, you're in Africa, you're in the Caribbean, I'll give you a $5, $10. And that's the reality of what we face. We have a power imbalance. So I think the whole thing boils down to equity. We need to have climate justice and equity. And how we are trying to address that is, rather than sort of focusing on just competing with everyone else for the mass of climate finance, knowing that we're outgunned. Instead, we're focusing on using philanthropy as a leverage to help us prepare so that we can compete evenly on accessing both internal private finance as well as global philanthropy. And that's how we're attempting to address it.
Thank you. And yeah, having worked in the climate finance and development space for a long time, you know, it is striking just how many of the kind of thought leaders and how much of the talent comes from the Caribbean in particular, but island states in general, and of course, a lot of that is natural given the fact that climate impacts are very much in everyone's face, but also that the development imperative for being able to develop in a way that shows leadership, that shows a model for others to follow, has been something accepted at the highest level, I think, in many of those countries. I really want to pick up on the issue that you raised about the kind of equity and the power imbalance, because I think that speaks to so much of what we're dealing with in climate change, finance, and in other ways. And I guess maybe this is an open question to the panel. I just, please raise a hand and jump in. But we have significant public climate funds of various kinds. We have new mechanisms such as carbon markets. How do we help guide climate finance in such a way that it addresses some of the inequities that we face? And those are inequities both in terms of between countries, where obviously some countries command much greater negotiating power than others, but also within countries and within different kinds of communities. So the Spirit of the Zayed Sustainability Prize is very much about empowering different communities, empowering women. We've heard some fantastic and inspiring voices from youth today. We very often in this space talk aspirationally about how climate finance is going to drive all of those things, but in practice that's often difficult to make real. How do we do it? Where are our successes? How do we drive climate finance in a way that helps those other values?
Okay, I'll take a stab at that. I think, and I'll use an example of work that we at the Environmental Defense Fund have been doing. There's a lot of focus on forest carbon. And in a lot of cases where you have forests, you have communities, quite often communities who are particularly vulnerable to not only the effects of climate change, but also to economic, they have difficult economic situations. And I agree with you, they're not always the best positioned to negotiate for themselves. And one thing we have found is by working with these communities and empowering them to understand the opportunity and the role that they can play. And we've been doing this in Brazil with some Amazon communities, working with different, groups that have the daily contact. It not only strengthens their voice, but also helps bring the stories of what good looks like. Because I think with the carbon market, the big problem is we talk about this thing, but we don't really put a face on what it really entails in practice, how it can solve for more than one challenge, and what really good is. And those stories are out there. But I think that we have failed in making those narratives reflect what it means for people. We're focused very much on the offset side, and then of course the politics that come around offsetting and greenwashing and green-wishing, or however you want to look at it, then actually makes it harder to leverage this instrument. So by empowering the indigenous people and the local communities to actually, claim their stake in these investments and being part of the solution, you then are at least part of the way towards building that equity within the system.
Thank you. Perhaps I can turn to our two friends from the multilateral institutions here. This is where obviously you're very often dealing in quite large-scale investment. These are not necessarily just programs of grassroots projects, but where you're trying to leverage large-scale capital into some of the areas that we're talking about. How there do you deal with, address, or at least safeguard some of the equity issues that we've been talking about?
Happy to chime in. Front and center DNA of the World Bank and IFC are really our environmental, social, and governance performance standards. And so when we do go in, we evaluate that. We also set up a map of what needs to happen during that financial engagement. And that involves not just the investor, not just us and other financial institutions, but the key stakeholders. And we're doing that also with some advisory services, mapping out that engagement to bring to light the critical factor and how they play a role. So I think that's important. On a flip side, I think these stakeholders are also beneficiaries. We are our whole mission is centered around poverty alleviation, shared prosperity, and in a sustainable planet. So we are very much have that at the forefront of our mind in all the work that we do and engaging. And when I mentioned some of the projects earlier, whether it's the Africa BRT in Senegal or Sao Paulo, I'm focusing a little bit on transportation. Those riderships are helping to benefit low-income passengers with new infrastructure that is helping to alleviate congestions, helping them better connect to jobs. So there's a wonderful benefits there that I think we need to also understand that we're addressing. I'm going to come back also a little bit to the adaptation question, because that resilience and that impact disproportionately affects the underprivileged. And so our addressing that front and center in what we're doing is a really critical step. It's critical for the infrastructure that we're building, because the last thing we want to do is, spend $100 million on building the new renewable power plant only to see it washed away in the next flood or blown away in the next hurricane. So that is critical. Adaptation and resilience are a part of our addressing mitigation. And when we address them together, we send a very powerful message out to the market. And back to that question of climate smart, bankable, viable projects, that's how we do it.
Yeah. We have to, we're working on building our general economic resilience, supporting entrepreneurs with climate solutions that are ready for export, and using that to build the economic resilience that we will need to be able to fund adaptation. Because it's so difficult. We're also using things like debt for nature swaps and blue bonds and anything funding ecosystem services, trying to sell those on an exchange, anything innovative that we can bring to the table. And yes, always layering that with some element of philanthropy, using blended finance, whatever tools we have in our toolkit. Because even if we, mitigated to zero, it wouldn't make a difference in our transition to net zero, because we don't contribute enough to be a major factor. We do it because it makes economic sense for us, because our cost per kilowatt hour is so high. We do it because we want to have moral authority to lead from the front, to say, listen, we are transitioning, and for us it's especially hard, but we're doing it anyway. So no one else has an excuse. But figuring out how to fund adaptation. And global finance, 94% of global finance is going to mitigation. And they said that, well, we're going to double global finance for mitigation, for adaptation. And I'm like, so we're going to go from 6 to 12? It's way underfunded. So we have to definitely come up with more innovation, but we also need to flood adaptation with finance.
This is a particularly pressing issue in Africa, of course.
I was about to speak on the issue of safeguards. As a multilateral development bank, we do also apply a robust and stringent safeguard processes on our projects. And these has evolved over time. We have started with environmental safeguards. Then now what we do at the African Development Bank, we have adopted what we call an integrated safeguard system, which has both environment, social, and also climate aspects. We have conceptualized something around climate safeguards, which is new, because you may know that currently, according to a recent assessment, 9 out of the 10 most vulnerable countries to climate change in the world are in Africa, sub-Saharan Africa. And there is a huge climate risk across the continent. So we are applying a climate risk screening tool to all of our projects to make sure that our projects are not going to be also affected by climate risk, but also to protect the communities where our projects are intervening in for climate risk. So there is a whole range of tools that we have developed over the recent years to address the issue of safeguards. Now, I think there is an issue around just financing. In my view, we need to be affirmative about climate finance, especially on those areas that are more affected. Because if you take, let me come back to Africa again. There is a magic around the number 3. Africa contributes only 3% of global greenhouse gas emissions. Africa receives only 3% of global climate finance. And if you take private finance for adaptation, only 3% is coming from private sector. 97% is from public funds. And I agree with you. How can we address this issue of equity? In my view, maybe there is a need to be affirmative on making sure that the global funds that we are putting up there are able to speak to the issues of those countries that are more affected, that are having issues to access climate finance. Yeah. And there is another area I think I should also speak to. Under the global climate convention, there is the principle of common but differentiated responsibility. And because of this principle, we have been only relying on funding coming from multilateral or bilateral systems. And given the crisis that we are facing now, we already see that national governments, even local governments, are using their own resources to address climate risk. So there is a need to also mobilize significantly domestic resources to address climate change. We see the losses and damages happening. When they happen, the first source of funding is national budget. So I think we need also to be strategic and making sure that national budgets can also be used to address the climate crisis, but also while diversifying the sources of finance. What we could do with bilateral finance, what we could do with multilateral finance, what could we do with private sector financing. So I think there is a range of issues that we need to address when thinking about the climate finance, especially in the regions that are more affected and that need it the most.
Thank you so much. There are so many issues here that we've touched on that we could go into far more depth on. We have 3 minutes left on this panel, so I'm going to do the least fair thing that any moderator can do and just ask, as you look forward over the next year, towards COP28, yes, but more generally over the next year, what do you think the most important thing is for us to achieve if we're going to start unlocking climate finance on this scale? Angela, can I turn to you as we go down the line? You have 30 seconds each to solve the world's problems. Thank you.
On it. 30 seconds. Okay. Well, I'll still stick with carbon markets, but I think we need to innovate around them. We need to tropicalize them to make them applicable to especially countries in the global south. And we need to think about how they can actually deliver at scale. And of course, with a high degree of accountability and integrity.
Thank you.
Quickly, I think adaptation, we need to double down on adaptation action, and especially adaptation finance. You mentioned the target of doubling adaptation finance. We are off track in meeting that target. I think this is a call to the international community to at least meet the adaptation target. We know that the community has already missed the big target of 100 billion, but for adaptation, I think it is within reach, and it's important that we reach that. Finally, loss and damage. I know that there is the loss and damage fund that is being structured, and I hope that we are going to learn from mistakes from the other funds in order to have a most effective and successful loss and damage launch at COP28. Thank you.
Thank you.
So much to say in so little time. I think key is really accelerate action and finance. And I'm going to use the words of our president, Anjay Banga, who at the G20 said of climate change and beyond, but global climate change is a challenge. And these challenges don't respect lines on a map. We must work together, or otherwise we all fail. So those were very inspiring words, and I think all of us here need to partner to drive the accelerated action and engagement and finance.
Yeah. Well, using your magic number 3 from Africa, I think 3 things. I think the first thing is transparency. I think it needs to be very, very clear who's doing what and the impact that it's having. I think the second one is clarity of the data. It's one thing to be transparent with the data, but if the data isn't something that people can action or act upon or even understand, then it's not useful. And then I think the last thing is the Bridgetown Initiative. I think it's a brilliant plan to bring climate finance globally, led by Barbados and the Caribbean. And I think all of those things together can help us to have more hope and optimism, and I think that's going to solve the problem.
Thank you so much. Well, ladies and gentlemen, a solution to your problem. This is a tremendously complex subject, but please join me in thanking Angela, Churie-Kallhauge, Racquel Moses, Gisele Saralegui, and Al-Hamndou Dorsouma. Thank you so much.